All right, so hello, my good friends. It is Doug here with the LincolnList.com, and today I want to welcome you to another edition of Stock Market Mutterings. This will be from March 23rd, and you know the slogan, where I take a grope in the murkiness, try to find you some setups. And like I've been saying the last couple of weeks, I got some groping to do because these waters are murky, and we're seeing a sell-off here that just continues to keep dropping and dropping with no apparent end in sight. Every level on this way down, every critical level, every milestone level of support has just been blown right through like melting butter. It just can't even hold it up. And what we're seeing here, like I think I said over the last couple of weeks, is a sell-off that the market hasn't witnessed since World War I. So all of us that are trading right now, who are alive on this earth, we're not trading in World War I. So we're all new to this type of correction. And we can all go back and we can look at other corrections. We can talk about the dot-coms all we want to. I experienced that. We can talk about 2008 all we want to. I've also experienced that. And the thing I'm really starting to learn now is every single correction is different. It's different with its outcome. It's different with its intentions. Now, what you're seeing here in this market, and especially when you see corrections like this, you have all these people trying to pick a bottom, and in a case like this, it's impossible to try to find a bottom. I mean, just regular technical analysis traders like myself, we start to look for support, resistance, and all that kind of good stuff. But in a case like this, it isn't really reliable because, like I said just a little bit ago, every entire support just gets blown through like it's not even there. Every rally gets stuffed and you continue to see new low after new low. Now, here's where I think this correction is different. Now, if you're a trader, before I go into that, let me just set the tone straight. If you're somebody out there that's investing, don't worry about it. Eventually, this will work itself out. We'll get through this. And if you're a longer term holder of equities and you're looking at from a longer term horizon for investment objectives, this is a good time to buy stocks because eventually the country will recover, the world will recover, and we'll be okay. So it could be, and if you're prepared for a little bit more downside, not a big deal. I'm talking about traders out there, us trying to work this for a living. Us maybe looking at larger opportunities down the road. What are the things that we should look for today to position ourselves to capitalize on either a rally or more downside? What's the best moves that we can make going forward this week? Now, on this topic about why this one here is different than the others, which some of this I've mentioned in rants, is that everyone's trying to guess what is the market cap hit? What is the wealth hit that is legitimate in a case like this? Is this over panic or have we not even panicked enough? Now, here are something that stands out when people are comparing other corrections. Like I said, I'm going to go back with '01 and '08 because those were two different types. And I said this also in a rant and a happy hour, I believe. In 2001, it was just wealth. And the mentality about it is when you lose wealth, it sucks. You get your feelings hurt, but you still have everything else in your life. You still have your loved ones. You still have your health, hopefully. It's just money, right? At the end of the day, it's just some ego hit, and it's money. But you're still allowed to spend whatever you have left if you do. You still can go to bars and, talk about your failures and drink it with your buddies. You still have a life to live, a free life. Same way with the credit crisis. It was a little bit, I felt that time a little bit more worrisome because people realized maybe the whole banking institution would fail, and that there would be no money left for anyone and all this hard work. But again, it's like it's a money problem. It's all based about money. And the thing is, sometimes we put too much emphasis on money. And it's more of an ego thing. You still have your loved ones, you still have your health, you still have your life. What we're experiencing right now is completely different because we don't necessarily have our health. We might be healthy now, but we're not sure. None of us is really sure what impact this is going to have on our health. We're also not sure what kind of impact it might have if we do get sick. Will hospitals be overstaffed? Will critical medications, just basic medications and medicines to keep you surviving, will they be available to you the time that you get sick, if and when that happens? So everybody's under this extreme panic about health because you're realizing something like this goes far beyond money. It may wipe out a big chunk of the world's population and affect each and every one of us to some extent. And that's some scary stuff right there. Now, when we look at this from a financial perspective, the thing that you have to ask is, even during those other crises, stores were open. Their business might have been slashed in the financial crisis, in the dot-coms. It might have been slashed, but they were still open. Many of these businesses are just closed, are absolutely closed. And the fallout from this is something I don't think any economist can predict. Because think about this. You have first just take the instant casualties. There's all these people out there around the world who just decided this year they were going to fulfill a prophecy of starting their own business. That was their New Year's resolution. And they just dumped a big chunk of their life savings into starting a business. And you could not have done it at a worse time, because they're now out of business with limited resources. They're done. They are absolutely done. They have took their savings, and this is just a shitty thing in life of piss poor timing, and they're finished. Because I've often talked about the failures I've had in business, most specifically my motorsports store. I dumped an awful lot of money in that, but I did that at a time when the world was safe. If I would have done it here, I would have been gone in a month. It was just a horrible, horrible circumstance. The other thing is all these businesses that run on credit, that use cash flow, like restaurants and stuff like that, that have just large volumes in and out, and they're just really relying on that cash flow. It's gone. It is absolutely gone. And even the big corporations. I mean, you're talking about the stuff that people use all the time, the retailers, things like Lulu or DEC or these other, I mean, you've seen the pictures of the Las Vegas Strip. It's like Las Vegas is closed. Closed. I mean, how much revenue is that? Nobody knows. And there's no way for us to tell. So when you're looking at a correction like this, we can estimate all that we want and say, okay, that's enough. We're overreacting. But the truth is, nobody knows, because earnings haven't come out. Companies haven't disclosed completely just how devastating. And this is a trickle-down effect. So this is just like the credit crisis, where people start losing jobs. Like if you're running a small business, which is the engine of America and the engine of this economy, this is the kind of stuff that happens here. And this trickle-down effect is hard. It's impossible, I think, right now to determine, because I know there's all these businesses say, we're going to continue to pay our employees. We're going to continue to provide health care for our employees. We're going to continue to take care of our employees. But that's now because they have some cash reserves. But the longer a shutdown happens and the longer it lasts, it will eventually come to a point where it's survival. They'll have no choice but to just cut the workforces. And you're seeing that across the country. And I think what I'm really trying to say is, we can debate all we want about whether it's overdone, this is too much, but we really don't know. And until there are some concrete answers where numbers start to line up, we're not. So you can't say that this is enough, because maybe it's not. With the dot-coms and the credit crisis, 50%. Now we're sitting here at 32 right now. I cannot see from everything that's lining up on my end how this ain't a 50%er. You might get a spike in there, but I can't see how this doesn't get closer to 50% and put us somewhere in that area. I just don't. And I think what we're going to see the short term, every time we see a correction, so many people are always programmed to go back to all-time highs. And the longer this lasts, the more difficult that recovery is going to be. You're not just going to get 1 month, I don't think, unless there's a cure for this. Something drastically, I think, would have to happen at this point, because the longer we go, people are going to be more geared towards survival. And it's going to be get out now, ask questions later. And we're in a period here where new cases are going to continue to get larger by the chunks because we were just so far behind the 8 ball to begin with. Now, I know I spent a lot of this watch list just talking about the overall market, because I think at this point, it doesn't really make a difference what stock you're going to trade. In 95% of the cases, every stock is going to replicate what the market is going to do. So like I said, if you're an investor, then there's some things you might want to look at. I would look at things like AAL. If you're longer term, you're looking at stuff like this. Airlines, we know, are going to get hit real hard. But we also know they have government protection. These are the banks of the 2008 financial crisis. American Airlines, Delta Airlines, rest of the airlines, that's AIG, Wachovia, if you guys remember that name. I don't know where that came from. They're the banks. These are the banks and the financial institutions of that. They're going to get a bailout. And in time, things will get better. But nobody knows this, right? So they've shut down here's a good example. They shut down a lot of flights. People are on quarantine. But nobody knows when that's going to happen. You got like a 30-day timetable, but what if it turns into 60, 90, 180, a year? We don't know. But the longer that it goes on, the worse it's going to get and the more of the unknowns. That's what I'm talking about. And you can pick the greatest companies in the world. Nobody's going to be immune. In a global pandemic where people are fighting for their lives, you can see the behavior that people have during that. You go to your local grocery store, they can't keep in alcohol and hand sanitizer. That stuff is just off the shelves. Guns, people are buying guns, so it's like that's what's happening here. So I don't know if I would say look at some airlines. I think you have to look at things like casinos, shorting on balances, Wynn, Las Vegas Sands, LVS. I can't see how they're going to survive longer term. Not longer term. I didn't mean that. That's incorrect what I was saying. I don't see how they can to build a rally. That's what I'm trying to say. I don't see how you can get a consistent weak rally on some of these names. There's just too many uncertainties. So the thing I'm really trying to play here is it's impossible for someone to pick the bottom. You take two sides of the fence here. If you are a longer term investor, this is a good time to start picking up some stuff that you wanted last year, that you're finally getting an opportunity to get in better. I would only do that if you're under the assumption that you might be 20% early. You might have to go through a complete 50% drawdown. You don't know. But if you're just somebody young or somebody investing and you got a 10-year time horizon, don't worry about it. Just start picking up some names. For traders, it's a day-by-day thing. It really is one day at a time right now. You just have to look at the market, look at the news. Sure, there will be rallies in here, and rallies will suck people in. I don't see any reason why we're going to make multi-day rallies and just start firing it off, put this behind us this quickly. Not after all the stuff that's still coming out, because again, nobody knows the true impact, and with reported cases and longer shutdowns, there is just no way that anybody can come up with an exact number. And the more we try, the more we're putting expectations on something that may not exist. We're just going to get destroyed. So I don't mean to be gloom, but I just don't see this happening now. But I'm a trader. And if I'm wrong, I'm wrong. I can adapt quickly. So for you traders out there, you just got to pick your shots, use your stops. We're all in a survival type of environment here. I'm not going to be the one that says this is the bottom and just go all in. That's not what I'm doing. Right now I'm scalping. I'm a survivor. I'm just looking for whatever's going for the next couple minutes that I can get in and get out. And I've just been hit and run. And it's going to be that way for a long time. So if you're a longer term investor, don't worry about it. For the rest of you guys out there, don't be foolish and try to pick a bottom here. It is different this time. This is something that we've never dealt with. We've never been quarantined. You look into the stuff coming out from Italy. You tell me how this market's going to react if we really get locked down. Like we're locked down and recommended to stay home in America, but you can still go outside and take a walk. But if and when it comes down where you're not allowed to leave your house and that's enforced by the National Guard and there's tanks rolling up and down the neighborhoods of the United States, that is going to scare the shit out of people even more. Because right now we have our freedom, but what happens when that gets taken away, man? We just don't know here. We don't. So I want you to trade them well. Just if you're a trader out there, you know the deal. It's one day at a time, one step at a time, one trade at a time. And that's all that you can do. If you're an investor, sure, it's okay to put some money to work, but I would not write off another 20%, maybe even 30%, because again, the theme for here, we don't know. It is different this time. So trade them well. You need my help. Reach out to me. Support at thelincolnlist.com. Thanks for watching Market Mutterings. Hope I made some sense out of this. Take care. Talk to you guys next week.